ICICI Prudential, iProtect Smart Plus and HDFC Life C2P Supreme are consistently among the most recommended term plans in India, each bringing distinct strengths, built-in features and pricing structure to the table. Today, we're comparing both of them in every dimension to help you understand which plan works best for you. Hi folks, I'm Shashank and you're watching Retro Insurance. We've helped over 8 lakh Indians choose the right term and health insurance plan through our no spam approach and through our honest advice only. And this is from our IRDAI certified advisors. So both ICICI Prudential and HDFC Life are our partner insurers and among our top recommendations. But like always, this is going to be a completely unbiased comparison based solely on features, performance and value. And if you want personalized help determining which plan suits your specific situation, pause the video right here, book a free call and then resume. The link is right in the description. Alright, now let's start with the performance metrics of these two insurers. The data that you see on the screens covers 2022 to 25 averages except for amount settlement ratio which spans from 21 to 24. Now, as soon as you see the table, what immediately stands out here is a service quality gap. HDFC Life operates at a fundamentally different level when it comes to customer experience during claim situations. That near perfect claim approval rate combined with complaint volumes that are literally 8 times lower than ICICI tells you something important about how these companies handle stressful situations. Now, ICICI does edge ahead slightly on the amount settlement ratio, which suggests that insurer is settling large and small value claims equitably. The business volume differential also matters, not because bigger is always better, but because HDFC's larger scale hasn't compromised their operational excellence, while maintaining superior service metrics, which indicates robust systems and processes rather than just brand size. Now, both insurers maintain healthy solvency ratios well above regulatory minimum, so financial stability isn't a differentiator here. But metrics-wise, both are solid. Now, onto eligibility and basic structure. Both plans allow entry from age 18 to 65 with maximum maturity age at 85 for HDFC until 99 for ICICI. Both offer multiple premium payment options including yearly, half-yearly or monthly modes, providing flexibility based on your cash flow preferences. You can choose between single pay, limited pay, pay till 60 or regular pay structures in both plans. Both plans accept salaried and self-employed individuals, though they're subject to medical and financial underwriting to determine eligibility and pricing. Minimum sum assured starts at 25 lakh rupees for HDFC, while ICICI follows similar norms, and technically there's no upper cap for either plans, though underwriting will determine how much coverage you qualify for based on your income, age and health profiles. Okay, now let's examine the benefit variant structures that these plans offer. ICICI iProtect Smart Plus provides 3 key benefit variants. The life option pays a lump sum death benefit if the insured passes away. The Life Plus option adds an additional accidental death benefit on top of the base death benefit if death is due to an accident, with both components fixed at purchase. The Life Rebalancing option starts with both base cover and accidental death benefit, but the ADB reduces after 10th year, though this variant is not currently live. HDFC C2P Supreme also offers 3 main variants. The Life option provides standard term insurance covering death due to any cause, with choices between level cover, 10% increase every 5 years or 5% increase every year up to 100%. The Life Plus variant adds an accidental death benefit to the base cover, paid on top of the life cover if death is accidental. The Life Goal option provides decreasing life cover, generally useful for those whose liabilities reduce over time, such as home loan takers or people approaching retirement. Now, a quick look into the built-in features. ICICI iProtect Smart Plus includes terminal illness benefit that pays a full sum assured immediately if diagnosed with a terminal illness, certified by 2 doctors with less than 6 months to live. Life stage protection allows you to increase your cover at major life events, marriage up to 50%, first and second childbirth 25% each, or home loan disbursement up to 100% increase. The conditions apply, including the proposer must be under 50, only the regular premium payment and subject to financial underwriting. Smart Exit provides zero cost exit after completing 25 policy years once you're 60 years. Your premiums excluding riders are returned and cover ends, though you can't use this in the last 5 years. Premium break lets you defer premiums for 1 year after 5 years while continuing coverage. Can't be used during the last 3 years, requires 5 years gap between breaks, and deferred premiums must be paid with next due premium, though this benefit can be availed multiple times. Insta payout on claim into patient pays 3 lakh rupees with 1 working day of necessary claim documents being submitted if policy has 1 crore cover or more, helping family meet immediate expenses. This is only available after 3-year waiting period though. HDFC Click to Protect Supreme includes terminal illness benefit that pays up to 2 crore rupees from base cover if diagnosed with terminal illness, certified by 2 doctors with less than 6 months to live. Life stage benefit increases cover when you get married, have kids. 50% with maximum 50 lakhs on marriage, 25% with max 25 lakhs on birth of first child, and the same for the second child. Available only if age is less than 45 and must be exercised within 6 months of the event. Smart Exit provides zero cost exit after 25 years, where you can surrender policy and get all your premiums back, excluding rider amounts, though you need a 31-year term and you cannot exit in the last 5 years, and this is not available with return of premium or life goal variants. Next one is the premium break benefit. This allows deferring one policy year of premiums after 5 years while staying covered, though you'll need to catch up the next year. Instant claim payout gives nominee 2 to 5 lakh rupees depending on sum assured instantly upon claim intimation with necessary document submission. If cover is above 1 crore rupees, helping with urgent expenses while full claim gets processed with 1-year waiting period since policy inception. HDFC also includes comprehensive inbuilt wellness benefits such as unlimited teleconsultations, diet and mental wellness sessions, preventive health checkups, cancer screening, digital health vault, health and pregnancy wallets, along with network discounts, ambulance support, and wellness content, ensuring holistic physical and emotional well-being for the insured. ICICI doesn't offer these wellness benefits as built-in features. The key differences emerge in the implementation details. ICICI's life stage increases allow up to 100% increase for home loans, while HDFC does not. HDFC's wellness ecosystem is more comprehensive, while ICICI focuses on pure protection features. Alright, now let's compare the optional riders that both plans offer, because this is where you can customize protection beyond basic death benefit. ICICI offers critical illness rider covering 20 or 60 illnesses where lump sum is paid on diagnosis in addition to the term cover valid for 20 years with 90-day waiting period and 15-day survival clause. And this is non-accelerated, so base cover stays intact. They also offer accidental death rider providing extra lump sum if death is due to accident within 180 days, though since accidental deaths are already covered under base policy, this rider adds limited value and may not justify additional cost, hence we don't actively recommend that. HDFC emerges as a clear winner considering waiver of premium and accidental income benefit. Apart from that, it offers critical illness rider covering 60 illnesses with 15-year term that pays out on diagnosis without affecting base life cover. This is ideal if you want protection from high medical expenses without mixing health insurance. Waiver of premium on critical illness and disability waives future premiums if diagnosed with listed critical illness or disability. Accidental income benefit pays 1% of rider cover monthly for 10 years after accidental permanent disability, providing solid income support too. However, if you're confused about which riders or which plan actually makes sense for your situation and which ones are just expensive, just book a free consultation with our advisors using the link in the description, who will help you understand which optional covers provide genuine value versus which are just marketing gimmicks. The link is in the description again. HDFC also offers some riders that we don't necessarily recommend, like spouse cover that provides up to 50% of base sum assured to the spouse after life assured's death with future premiums waived off. But if spouse passes away first, no payout is made, making it actually less practical since separate individual policies often offer better value, flexibility, and tax benefits. There's also return of premium, which at Ditto we never suggest. This gives all your premiums back at maturity but costs 80 to 100% more than standard plan, so this is not the most efficient use of funds. Accidental death benefit provides accidental sum assured in case of accidental death, but since accidental deaths are already covered under base policy, this adds limited value and may not justify additional costs, hence we don't actively recommend this. HDFC's other features and riders include renewability at maturity, allowing policy term extension up to 5 times based on age, term, and underwriting under regular pay and life or life plus options only, and parent protect care providing death benefit as a mix of lump sum and regular income for parents or grandparents. Okay, now let's examine how the nominee can receive the death benefit under these plans. ICICI iProtect Smart Plus offers 4 payout options for life and life plus variants. Lump sum pays the full amount at once. Income option pays 10% annually for 10 years. Lump sum plus income lets you choose a percentage as lump sum with rest paid monthly over 10 years. Increasing income grows payout 10% each year for 10 years with total payout at 145% of sum assured. Now at Ditto, we generally recommend lump sum since it's usually more flexible, especially for managing debts, investments, or big one-time expenses. You can take the lump sum, use money for immediate expenses, deposit in bank account, or if needed, even in fixed deposits as it's the simplest investment option. HDFC Click to Protect Supreme offers similar payout flexibility except for the increasing income option. Okay, now let's talk about discounts because these can significantly impact your first year premiums. ICICI offers 12.5% discount on first year premium for salaried individuals going with regular pay, 15% for limited pay, and 1 to 5% online discount depending on age, sum assured, and payment frequency. HDFC provides 10% discount for salaried individuals in first year, 5% additional discount for buying online in first year, and more discounts if you choose high cover or are existing customer or are HDFC employees including spouse. HDFC rewards smarter buying behavior with their discount structure. Now, both insurers incentivize online purchase and recognize lower risk profiles of salaried individuals, though ICICI's limited pay discount is higher at 15% versus HDFC's 10% salary discount. HDFC offers more granular discount for high cover amounts and existing customer relationships. Both provide age and sum assured based online discounts, though specific percentages may vary. Okay, now let me pull up the premiums on the screen. Take a look at the different price points for different profiles. HDFC seems pricier, ICICI seems more economically priced, but let me remind you that both of them differ on several fronts and the price is justified according to the features offered. So here's the comprehensive takeaway after analyzing both plans across every dimension. HDFC Life Click to Protect Supreme edges ahead in several critical metrics. The CSR of 99.55% is genuinely exceptional and industry-leading. Complaint volumes of just 1.33 per 10,000 claims are remarkably low, indicating superior customer service quality. Premiums are consistently lower across most age profiles, and the comprehensive wellness ecosystem adds tangible value beyond pure death benefit. The larger business volume and proven track record provide additional confidence for long-term protection. However, ICICI Prudential iProtect Smart Plus brings its own strengths. The amount settlement ratio of 95.1% slightly edges ahead HDFC, meaning they pay out marginally higher percentages of claimed amounts. Life stage increases allow up to 100% increase for home loans versus HDFC's capped structure. Strong digital infrastructure and urban presence appeal to tech-savvy buyers. So if you're trying to figure out which plan makes more sense for your specific age, income level, family structure, and financial goals, don't decide blind. Just book a free one-on-one call with our IDEA certified advisors using the link in the description. It's totally free, there's no obligation to buy, and this is tailored to your needs. Remember folks that no plan is universally the best. What works for you depends on your specific needs, life status, and financial circumstances. The key is to understand the trade-offs rather than choosing the first plan that pops up on your feed. Alright folks, I'll see you in the next one. Until then, happy insurance hunting.